One COVID-19 vaccine is here, another one possibly on the way. So, are we out of the woods as far as our economic recovery goes? Well, our chief equity strategist and economist, John Blank, would know the answer to that, and he's here with me now. John, we're finally seeing some light on the horizon with news of vaccines from at least one drug company already shipped. Initially, the financial markets celebrated the news that this day would come soon. Does this remove uncertainty from the markets now? And what does it mean for the economy?
The basic thing, Terry, we're learning about the vaccine distribution and the free money and all the stimulus is it's a three-part bullish strategy because there's really nothing, there's no downside. So it's just a situation where, from a financial market perspective, there is no downside. It's very, very hard to come up with a bearish downside other than the valuations. But when you put the Fed at zero rates for 2 or 3 years, it's very hard unless you have inflation, and you don't have that. So that gets us to the second point, which is the economy and the stock market are completely different animals. And the COVID restrictions that are in place will and are going to cause, through the Christmas season and probably into the spring and even into the summer, a limitation on the amount of macroeconomic activity that we see. So keep these ideas in mind. Bullish on stocks, but really ignoring the fundamentals, and they're not good.
So there's been some glitch in delivery of the Pfizer vaccine. Does this pose any type of a sticking point for the markets?
No, I don't think so. I mean, obviously being the first one out and obviously having some cold storage issues are meaningful challenges, but they're the snowplow. They're going to blow open the distribution channels and teach all the other players. And you have to remember that Operation Warp Speed is the player here, and that's the key element, is that this is coordinated by a general, and this is probably going to transfer some knowledge to the other vaccine players as time goes on.
With mass vaccinations still a good way out, might we see some weakness in jobs or even a flatlining there where no jobs are being added?
We're seeing it now, Terry. We don't need to wait for that. We're seeing it now.
So what do you think of that stimulus bill that you mentioned a moment ago and the current one being proposed?
The skinny stimulus bill to get the pandemic unemployment insurance up to speed is going to happen. It's going to happen probably today. This is we're talking on December 17th. But certainly the 26th is the deadline for those expirations of those packages. So there's no way that's not going to happen this week or next. The other issue is, I don't think anybody's fighting that hard, right or left, Republican or Democrat, because you can always push this out past the January 5th Senate vote in Georgia and also Biden's inauguration in January the 20th. So you can kick the can on this, basically. So a small package and then kick the can until after January 20th.
So let's look a little closer at the markets, and you alluded to this a little while ago. What about investor concerns on overly bullish market sentiment and lofty stock valuations, despite the vaccine news in this pandemic market?
Terry, I've seen these lofty sentiment indicators, and this is really perplexing because there's no question that these markets are overvalued, but there's a lot of money is made in momentum trading on the way through for months. So you kind of have to be vigilant and understand that you can make money in these overvalued markets and just suck it up, because you're going to miss it out on an opportunity with this much, three-part backing to the bull. You got to kind of stay with it and just understand that once this thing rolls over, just get out.
What's driving the markets now?
It's everything, Terry. It's those three things. It's the vaccines, it's the fiscal stimulus, one or two parts, and it's the Fed money and all the central bank money outside the United States. It's just the most bullish scenario for stocks you possibly imagine.
Will other positive economic data like that third quarter GDP continue to underpin our economy going into the new year?
GDP data, when is the last time GDP data ever mattered? It's kind of a backward-looking indicator. And in a COVID restriction environment, it's even less understood than ever. So I just think the market's ignoring it. It won't matter what happens there.
All right. Well, you've been focused on some of the biggest of the big stocks, namely Charles Schwab Corp, Goldman Sachs Group, and Quidel.
Right. Charles Schwab Corporation, you might be amazed by this relative to 2008. It's a much larger market cap now that they've bought TD Ameritrade than the second pick, which is Goldman Sachs. That's amazing. But both are Zach's number one ranks because they're in the stock market story and their transactions are driving and their trading are driving off that story. So that's why you like both names. I just think it's interesting that Schwab is bigger than Goldman. Most people wouldn't believe that now, but it's actually true. Quidel they are the ones making the testing packages that most people are using. So the more testing, and you see those testing numbers go up, 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 up. Quidel's play. Just remember that you're not the first guy to find the Quidel play. These are all well understood. So there is a short play to Quidel, and I wouldn't buy it unless there's a pullback.
Our chief equity strategist and economist, John Plank, talking about the global markets and the economy in light of the COVID-19 vaccine news. And we want to take this opportunity, John and I, to wish our listeners a very merry holiday season and a prosperous upcoming new year. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.